We're stepping into a conversation that has long been at the center of global currency speculation, the potential revaluation of the Iraqi dinar for years. This possibility has held the attention of a diverse group, from seasoned international investors to everyday citizens holding dinar notes, creating a unique blend of hope and skepticism. The idea itself is compelling, a scenario where a currency's exchange rate dramatically shifts upward, potentially multiplying the purchasing power of every note held overnight. This isn't just a matter of changing a few personal spreadsheets. It's an event that could trigger widespread shifts in both personal financial planning and broader investment strategies worldwide. Decades of anticipation have fueled an almost continuous stream of rumors, unverified reports, and detailed projections concerning when and how significantly a revaluation might impact the dinar's value. This cycle of hopeful anticipation mixed with necessary caution has created a unique community of dinar holders. However, a subtle yet significant shift in the economic and political atmosphere surrounding Iraq is starting to emerge, suggesting that the current moment might be different from previous periods of intense speculation. Analysts are increasingly observing a notable convergence of critical factors within Iraq that appear to be aligning the country for a major monetary transition. What makes this period particularly noteworthy is the momentum behind Iraq's economic reforms, its improving political stability, and a visible commitment to modernizing its financial sector. While it's essential to emphasize that no official confirmation of a revaluation has been released, the cumulative signals suggest a methodical preparation is underway. This growing alignment of positive indicators means that for anyone tracking the Iraqi dinar, this is a time for heightened awareness and careful observation. The situation transcends typical market hype and demands serious attention to the unfolding developments on the ground in Iraq. The discourse around the dinar is broadening significantly. It's no longer confined to niche investor forums but is increasingly entering mainstream economic conversations, largely due to stabilizing oil revenues and a consistent push on the country's reform agenda. The potential consequences of such a revaluation are vast, encompassing immediate financial gains for current note holders and more profound, systemic economic changes. These shifts could dramatically influence international trade, banking operations, and the overall investment climate within Iraq and extending beyond its borders. For many who have followed this story for so long, the sheer scale of the potential change can still feel remote, yet it is precisely this intensifying anticipation that defines the current moment. The concept of a dinar revaluation has been a constant fixture for years, enveloped by intense debate and continuous speculation. The effort to predict the timing and mechanism of a potential change has occupied investors and analysts for more than a decade. Proponents often argue for its inevitability, pointing to Iraq's immense oil reserves, its developing economy, and historical precedents of currency reevaluations in other resource-rich nations. These arguments provide a foundation for those who believe a significant monetary adjustment is simply a matter of time, driven by fundamental economic forces. Conversely, a segment of observers remains skeptical, dismissing the revaluation concept as overly optimistic speculation. They caution that deep-seated issues such as persistent political instability, the friction of bureaucratic processes, and unpredictable global economic headwinds could indefinitely postpone any substantial monetary change. This cautious perspective serves as a vital counterpoint to the more enthusiastic narratives, reminding observers that complex geopolitical and financial realities often impede even well-intended reforms. The history of currency adjustments worldwide shows that delays are common. The period spanning 2024 into 2025 is seen as particularly unique because of the confluence of several pivotal factors, creating an environment markedly different from previous speculative cycles. The Iraqi government is demonstrably advancing its agenda, actively pursuing reforms to enhance financial oversight, increase banking sector transparency, and heavily invest in essential infrastructure. This sustained commitment to modernization is a compelling indicator for international investors, signaling a serious and deliberate shift in governance priorities. Fueling this reformist momentum are Iraq's consistently robust oil revenues, which continue to provide the national treasury with significant fiscal capacity. This steady inflow of wealth grants the government the necessary financial resources to sustain its ambitious economic agenda and back up any potential currency adjustments. The convergence of these powerful elements, internal reform, stable oil income, and increasing international financial and diplomatic engagement, suggests that this time may indeed be fundamentally different. paving the way for a major monetary event. As a result, the phrase RV countdown has become more prevalent in investment circles, transitioning from mere enthusiastic jargon to a reflection of a more cautious and systematic preparedness. While uncertainty is an ever-present feature of global finance, the current trajectory hints strongly at a scenario that many dinar holders have patiently awaited for over 2 decades. This environment is a powerful reminder that detailed research, strategic foresight, and unwavering patience are crucial elements distinguishing those who capitalize on an opportunity from those who remain unprepared or responsible. Approach to navigating the complex landscape surrounding the Iraqi dinar requires a clear understanding of the broader economic context. To correctly interpret the current signals, it is essential to distinguish between two frequently confused terms, revaluation and redenomination. Although they are often used interchangeably in casual discussions about the dinar, their purposes and resulting effects are fundamentally distinct, and this differentiation is vital for informed analysis. Revaluation is the strategic act by a government to increase its currency's fixed exchange rate relative to other global currencies, such as the US dollar. This move is typically implemented to signal a country's strengthened economic position, increased foreign reserves, or improved fiscal management. In essence, it is an official declaration that the currency now commands a greater inherent value in the international marketplace, directly impacting its purchasing power abroad and its global perception. Redenomination, conversely, is primarily a domestic reform aimed at practical convenience. It involves adjusting the nominal value of the currency by removing a number of zeros from banknotes. The central goal is to simplify daily transactions and make routine financial tasks, such as pricing, accounting, and managing wages, significantly easier and more manageable for the public and businesses alike, without necessarily changing the currency's underlying value. While revaluation focuses on global purchasing power and international valuation, redenomination primarily streamlines local commerce. The Iraqi dinar has suffered from a history of inflation and instability, leading to banknotes that are denominated in large numbers, often thousands or tens of thousands of dinars required for simple daily purchases. This numeric complexity complicates everyday financial life for ordinary citizens and businesses. The current signals emanating from Iraq suggest that the government recognizes the necessity of addressing these dual issues, potentially by implementing a strategy that combines both revaluation and redenomination. This dual approach is highly strategic. A revaluation would establish a new, higher international value for the dinar, and the subsequent redenomination would then provide a more practical and user-friendly currency for domestic use. Such a coordinated, dual approach would fundamentally reshape the financial reality for both local Iraqis and international dinar holders, potentially marking one of the most significant monetary overhauls in modern Iraqi history. The implications of this are extensive, moving far beyond mere convenience to address national confidence, bolster the country's position in international trade, and significantly enhance its long-term economic credibility on the global stage. In the last year, Iraq has systematically advanced its economic framework through several key developments that signal a tangible preparation for comprehensive monetary reform. The adoption of advanced banking technologies, including new digital payment systems and a modernized interbank network, has significantly improved the efficiency and transparency of the financial sector, a crucial prerequisite for major currency changes. Simultaneously, major infrastructure investments spanning transportation, energy, and urban development are expanding, generating broader economic activity and projecting an image of stability and progress to the international investor community. This commitment is further solidified by Iraq's strengthened partnerships with international organizations and key trading nations, which collectively foster greater confidence in its long-term economic governance. This sequence of economic stabilization, system modernization, and confidence building directly mirrors patterns observed in other countries that successfully implemented major currency adjustments. Central to Iraq's ability to sustain these reforms is its vast oil sector. With some of the largest proven oil reserves globally, Iraq's robust production levels generate substantial, consistent revenue, providing the fiscal strength necessary to finance ongoing economic development and structural reforms compared to the instability, security concerns, and bureaucratic hurdles of a decade ago. Iraq today projects greater institutional confidence, exhibits improved governance, and maintains a deliberate focus on sustainable long-term growth. This renewed stability provides the essential financial buffer required to manage a potential revaluation smoothly, enabling authorities to adjust the currency's value without inducing undue economic shocks or widespread disruption. Within this modernized context, the possibility of a coordinated revaluation and redenomination no longer appears as purely speculative or hopeful thinking. Instead, it aligns logically as a natural progression of Iraq's ongoing, systematic economic and monetary planning. It represents a clear signal to both domestic and international stakeholders that the nation is actively preparing to transition into a new, more stable chapter of its financial history. Redenomination, while frequently overshadowed by the excitement surrounding revaluation, is a critically important practical element of any successful currency reform. It directly addresses the day-to-day inconvenience for ordinary Iraqis, where simple transactions, such as buying a coffee, can require large stacks of high-denomination notes. This numeric clutter creates complexity for consumers, businesses, and banking institutions in accounting and cash handling. Historical examples demonstrate the power of redenomination. Turkey, in 2005, famously removed 6 zeros from the Turkish lira, instantly simplifying purchases for its citizens and bolstering trust in its financial system. Similarly, Brazil has historically undertaken multiple currency restructurings, often pairing redenomination with monetary stabilization efforts to regain economic credibility and streamline commerce. In the Iraqi context, the most likely and sensible sequence would involve a revaluation first, to correctly establish the dinar's new domestic and international purchasing power, followed by a redenomination to ensure the currency is practical and efficient for daily use. This order is paramount because removing zeros without first adjusting the underlying value does nothing to enhance purchasing power or address core economic challenges. Current trends suggest meticulous planning regarding timing, coordination, and public communication, all vital components for a successful execution. Financial analysts are keenly observing subtle yet telling moves from Iraq's central bank that strongly suggest methodical preparation for major monetary adjustments is underway. Changes in monetary policy, including precise adjustments to interest rates and reserve management strategies, indicate a heightened focus on macroeconomic stability. Concurrently, substantial investments in digital payment platforms and modernization of banking infrastructure reflect a clear commitment to the efficiency and transparency required for a large-scale currency transition. Implementing comprehensive reforms without this level of preparation would invite chaos, potentially overwhelming citizens and financial institutions attempting to exchange old notes. Iraq appears determined to avoid such pitfalls, adopting a series of incremental yet deliberate steps to guarantee a smooth transition. This methodical approach is reminiscent of the extensive, years-long preparatory groundwork laid by European nations before the seamless public launch of the euro, highlighting a long-term strategic vision. The prospect of a revaluation and subsequent redenomination presents Iraqi dinar holders with both significant potential opportunities and logistical challenges demanding careful management. A successful revaluation could dramatically increase the dinar's value against major currencies, potentially transforming existing holdings into substantially more valuable assets and naturally generating excitement. However, redenomination introduces the procedural necessity of exchanging old notes for new, zero-reduced bills, a step that must be navigated with care. The crucial element for holders is the sequence. If a revaluation precedes the redenomination, holders' purchasing power could be significantly amplified. If redenomination were to happen without a preceding revaluation, the change would be primarily a structural convenience, simplifying usage but not fundamentally impacting real financial value. Therefore, reliance solely on unverified rumors is risky. Vigilance and informed preparation, based on official announcements and credible economic analysis, are essential for mitigating risk and maximizing potential benefit. Timing is universally one of the most difficult aspects of currency reform, emphasizing the necessity of patience and detailed awareness for any investor. Significant currency adjustments demand extensive coordination between the government, the central bank, commercial banks, and international financial partners to ensure global acceptance and a seamless implementation. Financial systems, both domestic and foreign, must be updated. Institutions must be prepared for mass conversions, and effective public education campaigns are often necessary to prevent confusion. These extensive preparatory processes can often take years behind the scenes, even if the eventual public announcement and visible effects appear sudden. The euro rollout is a perfect historical example. Years of detailed preparation culminated in a short public transition window, creating an impression of immediate change despite the meticulous planning. Iraq appears to be following this proven blueprint, gradually modernizing its financial infrastructure and laying the essential groundwork for broad economic stability before executing any currency change. It is also vital to address and dispel common misunderstandings about revaluation and redenomination. One pervasive myth is the idea that revaluation is a magical creation of instant wealth, detached from underlying economic realities. This is false. For a revaluation to be both credible and enduring, it must be solidly supported by real economic pillars, including consistent government policy, fiscal stability, and tangible assets like strong oil revenues and trade balances. Lasting currency value cannot be achieved through mere speculation. Another frequent misconception is that redenomination inherently equates to a loss of wealth or value. When executed correctly, redenomination is simply a numerical simplification. It does not alter the actual purchasing power of the currency for citizens or investors. Successful historical examples, including Turkey and Brazil, demonstrate that a properly managed redenomination can streamline transactions, restore public confidence in the financial system, and improve overall economic efficiency without diminishing existing wealth. What, then, are the signs that suggest Iraq is closer than ever to these major currency adjustments? Several converging indicators suggest deliberate preparation. Firstly, Iraqi officials are increasingly transparent and vocal about their commitment to economic stability, fiscal reform, and modernization, signaling clear intent. Secondly, the expansion of international trade partnerships is bolstering Iraq's global financial credibility and attracting foreign investment, which directly supports currency stability. Thirdly, crucial infrastructure projects, from transportation networks to digital systems, are rapidly advancing, demonstrating a commitment to building the essential practical foundations for robust economic growth and efficient monetary operations. Fourthly, the financial sector is undergoing deep modernization, including investments in enhanced banking services, digital payments, and regulatory improvements, all critical prerequisites for handling large-scale currency changes with minimal disruption. These are not isolated or accidental developments. They form a cohesive, compelling picture of methodical preparation aimed at creating the necessary conditions for a successful currency reform. The cumulative effect of these steps, observers note, is significantly different from previous speculative cycles, lending credence to the belief that the current period could indeed be a pivotal one for the Iraqi dinar. As Iraq aligns its policies and infrastructure for a smoother transition, the global environment remains a critical factor. External factors, including global oil prices, regional security dynamics, and the state of international financial markets, will significantly influence the final timing and impact of any Iraqi currency reforms. Oil is particularly vital. Iraq's heavy reliance on oil revenues for fiscal stability means that strong global demand provides the necessary financial cushion for a credible revaluation, whereas sustained price declines could force delays. Similarly, regional stability is a prerequisite for maintaining the investor confidence and political environment, essential for major monetary reform. Encouragingly, the current period shows a unique convergence of generally favorable factors. While regional risks always exist, they appear less volatile than in many past years, and Iraq's government remains singularly focused on its long-term modernization agenda. Expanding international trade relationships further solidifies Iraq's economic outlook, creating a unique window for action where reforms can be implemented with greater credibility and effectiveness. For dinar holders, meticulous preparation remains the most crucial tool for successfully navigating any forthcoming changes. This starts with a clear understanding of the specific notes owned, as different denominations may be handled distinctly during a conversion process. Identifying authorized banks and currency exchange services that are equipped to manage dinar transactions is also essential, as not all institutions may participate, especially in the early stages of a rollout. Furthermore, the physical condition of the notes is paramount, as worn or damaged bills could be rejected, necessitating careful storage. Most importantly, holders must prioritize official communication from the central bank and government channels over rumors or speculation, maintaining a calm, disciplined, and patient approach, recognizing that currency reform is a structured, business-like process and not a gamble, is the factor that will distinguish those who benefit from those who are caught. Unprepared. One fundamental truth about currency reform is that it cannot occur in total secrecy. While the groundwork updating infrastructure and coordinating with international partners is conducted quietly, the actual execution requires public transparency. Governments must provide advance notice to citizens, businesses, and financial institutions to ensure a smooth transition, and international banks require clear guidance to adjust exchange systems and process conversions. Secrecy is primarily limited to the planning, not the public execution. This dynamic implies that when Iraq is fully prepared to execute an adjustment, be it a revaluation or redenomination, clear official signals will invariably precede the actual switch. These observable signals, including regulatory updates, enhanced digital banking infrastructure, and announcements of economic reforms, form the preparatory puzzle. The current visible groundwork, combined with policy adjustments, suggests methodical preparation rather than mere speculation. So, has the revaluation countdown truly begun? While precise timing is impossible to predict with absolute certainty, the compelling evidence suggests that Iraq is closer than it has been in decades to executing a significant and coordinated monetary reform. The potential recalibration of the dinar's value would better reflect the country's actual economic strength and stability, creating a distinct window of opportunity for holders who understand the required sequence of events and prepare accordingly. The historical pattern seen in reforms across Turkey, Brazil, and Germany all involved extensive infrastructure development and years of groundwork before the public implementation. While the change often appears sudden to the public, it is the product of meticulous, advanced planning. Iraq is now displaying many of the same key indicators, including banking modernization, digital adoption, and infrastructure upgrades, suggesting it is methodically preparing for a transition that could materially affect the usability and value of its currency. The major takeaway for anyone monitoring the Iraqi dinar is this: genuine currency reform is not an instant event. It is a carefully orchestrated, multifaceted process that ultimately rewards preparation, patience, and a keen attention to detail. True opportunity arises when holders comprehend the fundamental groundwork being laid, the logical sequence of events, and the core economic factors that must underpin a credible revaluation and redenomination. The confluence of conditions in 2025 appears more aligned than in many preceding years. Iraq is steadily modernizing its financial systems, expanding digital payment infrastructure, and solidifying its regulatory frameworks. Simultaneously, robust oil revenues provide the essential economic stability. These improvements, alongside growing international trade partnerships, all point toward deliberate, verifiable preparation. The current countdown feels tangible precisely because it is accompanied by these observable and verifiable steps for those holding dinars. Considering entry, or simply following global economic shifts, this remains a story of high significance. A potential transformation of Iraq's currency could generate significant ripple effects across regional and international financial markets. The key remains staying informed through official developments, maintaining discipline, and being ready to act decisively when clear, credible signals finally emerge. The preparations are visible, and history may indeed be unfolding.